So this strategy over here deserves to be hanged on the shelves, or even to be thrown in the dustbin at this point. Why? Because it simply doesn't work. I know that some of you still use this strategy, and I know I'm gonna get a lot of hate in the comment section. But throw whatever you're gonna throw at me, but I just have to get us to at least watch. What I have to say in this video and see and compare this strategy to the one that I'm going to be sharing with you, and see which one is better, which one is more valuable, which one will make your 2025 a better year, and which one will make you more profitable. So just for curiosity's sake, I want to know, just comment in the comment section below if you heard about the payapa. Is it payapa or papaya? It's payapa. In fact, payapa strategy, who has used it and how it worked for you before. Just comment in the comment section below how it worked for you before I give my views on how this strategy actually, yeah, it's not actually the best to use for your in the future. Actually, not in the future. Actually was never good, but once it was just hyped as if it was better to use if it was great strategy. So let me just show you. You want to know the indicators? Let me just show you the settings for the charts. These aren't gonna matter because you aren't gonna need this strategy. Why? Because you aren't gonna use it anymore. So first of all, just put the RSI levels 10, 20, 50, 80, 90. You can click save. Then first moving average, you're gonna put a period of 2, exponential apply to close. Then this one's gonna be green, right? Then the following is going to be yellow, and the period of 8. Everything else remains the same. And then the third one is going to be the 13 moving average, exponential moving average, purple or any other color of your choice, right? And then the last one, or it's not the last, but last of the smaller indicators, smaller moving averages, it's going to be the period of 21, exponential, and this one is going to be red. So the first one, which is the 2-period moving average, and this one red, are the ones that the color meters, right? So take note of these colors, right? Red and the green, right? And then for the last moving average, you're going to be using you're going to be inputting 200 moving average, and then black over here, and then click save. So after this, what I'm going to do is, this is how the chart usually looks like. I don't know if, yeah, maybe you can just adjust it a little bit so that you can be able to see it clearly, right? So from the strategy, as you can see right over here, the labelings, right? So when the moving averages, right, these ones reach these regions over here, and they cross over this black line, we sell, right? And the opposite is true for this over here. When the moving average is right over here, they reach this buy region over here, and they cross over this black 200 moving average, which is the black line, right? And cross to be above. That's when you enter for your what, your buy, right? So this seems as if it's good right now, since I'm showing you an example that's worked. But wait until I show you how this strategy can actually make you lose a lot of money. As you can see over here, because this example worked, right? It seems as if you got even an earlier entry line, and everything was all rosy, everything was all honey, right? But what if I tell you that this strategy actually doesn't work? Right over here, let's take this for example over here. The first reason that this doesn't work is moving averages, if they are put on the indicator window, they repaint. Indicators that repaint, if you want to test them, back test them, they look like as if they always work, but that's not the case, right? What do I mean by repainting, right? As you can see, the moving averages are changing position each and every time you move your charts, right? So this is what we call repainting, right? So this, let's take this for example over here, right? So this was what the market was doing right over here, right? We are not considering whatever is going to come after the right. So over here, where are we going to sell, right? The market is over the 80, 90 region, right? Crosses over this black moving average over here, right? We enter ourselves, right? But guess what? The market continues what? Going up. Over here, there was another certain point over here where the moving average is the green and the red ones crossed over below this 200 moving average, and guess what? The market still continued to what? Continue to buy. So this indicator is actually very useless. Why? Because it's showing you exactly what the chart is doing. So what purpose does it serve? It's not an indicator. It's not giving you another insight. It's just showing you what the market is doing, right? So this, first of all, is because it repaints, right? Second of all, it doesn't give you entry points, it doesn't give you any warning, it doesn't give you anything. It's just a repetition of what the market is showing you. It's just price action. In fact, it's worse than price action because it lags. It actually lags. Right? So price action is actually the best. It's actually better than this. Right? So those are the main reasons that why I don't encourage you to use this payapa or papaya moving average strategy on the indicator window. So if you've got anything similar to this, anything that repaints, right, those strategies aren't gonna work for you. Those strategies, as for me personally, of course everyone has their own preferences, but as for me personally, I don't encourage those. Right. So what am I encouraging you to use? Right. So first of all, there's what is the MACD. There's the MACD, right? It's actually a little bit better. Right. Let me just show you how you can set this up. Right. So you put the MACD right over here. We want to click what right over this F over here on the MACD. Right. This F insert a moving average. This one we're going to be putting a period of what? We're going to be inserting a period of 1 exponential applied to now its first indicator window or previous indicator with previous indicator data, right? And then pixels, let me just choose, okay, let me use 2, and I'm still going to be using this black, right? So this is the first one that you can use, first strategy that you can use, first indicator that you can use, but it's actually the one that I'm going to be showing you. That's the ultimate, that's the best, that's the one that I use mainly. That's what I'm going to be showing you next, right? But there are other indicators that you can actually use, but these ones are actually better. Why? Because as you can see, it doesn't repaint, right? So if we move the charts, the position where the MACD was over here, it doesn't change when we move the charts, right? So this actually gives you a chance to backtest and see when it worked, when it didn't, and all that, right? So how do you use the MACD, right? So first of all, the MACD actually shows you the trend. It confirms the trend or which trades you're supposed to be looking on the time, which trades or positions you are supposed to be entering on the time frame that you are on. Right? So when these histogram bars over here, right, when these small histogram bars are above the level 0, right, this level 0 over here, this shows you that you have to be looking for your buying opportunities, right? So when these bars are above the level 0, right, we are supposed to be looking for our buying opportunities, right? And when the let me check where there's what where the market is in a downtrend. When the bars are in a what in a below the level 0 over here, like this over here, you're supposed to be looking only for your selling opportunities, right? So this is actually how you use the MACD to show you the trend. Unlike this over here, yeah, it crossed over here. It's actually the same, but when are we going to be getting an entry? It doesn't confirm where to get an entry, right? So when you're using the MACD, when you're trading with the trend, you can actually get your further entries when the MACD over here crosses this red and this black line over here. When they cross, you can actually add more positions to the downside to further aid what your trade. Though it doesn't work all the time, right? Like this over here. Over here, we could have been entering for ourselves over here. Though we went a little bit in profit, but the market actually eventually reversed against us, right? So right over here, this is another advantage of the MACD over the payapa over here, right? So right over here, as you can see, I'm sure you know what divergence is, right? But over here, right? Or as you can see, let me just show you, let me draw this small trend line over here. And so right over here, you see the trend line, this trend line over here, and then let me show you what the difference is on the moving averages and on the market on the main chart and the indicator window, the MACD. Right. So over here, as you can see at this point over here, this correlates with this point over here. This is the same point. Right. So on the main chart over here, you can see that the candlestick created what a lower low. The moving averages, they just copy what the market is doing. Right. They also created what a lower low, but over here, this MACD over here, it created what a higher high. Right. So this is what we call what divergence. Right. So divergence actually shows you that the market can actually reverse at any point, right? So you have to be careful which trades. So you have to be careful which trades you are looking for. Why? Because over here, this divergence is showing that the market can reverse or you have a pullback, a small pullback to the what, to the upside. Why? Because this divergence is pointing what, to the upside over here, right? So if you want me to make a video that goes further into depth about these divergences, because there are actually a few different types, and how you know which direction the market is going to take or is likely to take, then you have to then just comment in the comment section down below that you want to learn more about what, about divergence, right? So you have to be careful about divergence when you are using this indicator, but it's actually better, unlike this over here, which is just repeating what the market is actually showing us, right? So this is how we use the MACD. I think this is just brief. If you want me to go further into depth, then comment in the comment section down below what you think. And so far, what do you think? Which indicator is actually better, right? Which indicator is simpler, gives you more entries? I just want to know your thoughts, right? So then this, let me just move on to this chart over here. Right, so this is the TDI, right? The TDI is what I use for BTMM, right? I'm a BTMM trader. I learned BTMM, right? So I just incorporate it into these synthetic indices over here so that I get clearer entries, right? So over here, this is actually a further advanced version of what, of the MACD sort of like, right? So it's almost similar to the MACD, the divergences and the entries. We still get them over here, but right now we've got what, further confirmations, right? Because we are using what, Bollinger Bands also, right? And this over here, the MBL, this market baseline, right over here, this is the black one on the middle of the chart, on the middle of the Bollinger Band, right? When you get our bounces over there, we know that that's a sweet trade, right? So let me just show you how to set up the TDI, right? So first of all, the TDI, we've got the RSI, right? Period of 21, style, you can just use 0. Then over here, you put your levels 30, 70, and 50, right? And then you click what, done. Then over here, the first moving average over here is going to be period 2 again, right? But now the method we are using exponential, unlike those other ones, and then apply to previous indicator data or first indicator data, right? Then click save. Then the second moving average is going to be period of 7, simple again, previous indicator data, and we choose red. Click done. Then for the Bollinger Bands, it's going to be a period of 34, deviation of 1.619. First, apply to first indicator data over here. Take note of this. First indicator data, and then they are blue, and then click what, save. And then the last moving average, this is going to be the MBL, right? It's 34 again. Then first indicator data, simple, and then click what, click save. So that's how you set up what, that's how you set up the TDI. Then how do you take your entries over here? So it's similar to what I was showing you on the MACD, but over here we're going to be using moving averages on the main charts again, right? So on the main chart we're going to be putting moving average period of 50, exponential, apply to close, right? Click on my chart, then click save. Then the second moving average is going to be a period of 200, exponential, apply to close, and click save again, right? So now that we've done this, right, how do you know, determine the trade using this, right? So using this now, we determine it's a little bit complicated. That's why I wanted to show you the MACD first, so that if you are just there for the simple stuff, or to go straight forward, and if you are still a beginner, I advise that you use the MACD. And then this TDI, it actually needs not just one lesson, but actually a few lessons, right? So if you're interested in learning exactly how to use the TDI, then comment in the comment section down below again. But today I'm just going to be explaining a little bit on how to use what, how to get your entries on the what, on the TDI, right? So how do you know the market direction using what, the TDI, right? So first of all, if you see the green line over here, the green, especially the green, but both the green and the red mainly, but the green, if it's below the black moving average over here, below this black over here, you know that the market is what, in a downtrend, right? But that's not very accurate, because from time to time the market escapes a little bit from the what, from the black moving average, but still continues what, continues going down, right? So whenever this green moving average is below the level 50, know that it's what, it's a downtrend, right? It's below the level what, 50, right? That's one. And then whichever direction this MBA over here, this black moving average is pointing, is the downtrend. It's, it's the trend, right? So if it's pointing down, know that it's a downtrend. If it's pointing up, know that it's what is an uptrend, right? But wherever the green line, if the green line is below this black moving average, it's a downtrend. The green line is above the black moving average, it's an uptrend, right? So it's a little bit more complicated and it needs to get used to it before you start using it. Then for your entries over here, we're going to be entering when the market pulls back to the 50 moving average. We want to see that the green line over here also pulls back to nearer to the 50 level over here. And when you get that crossover here, right, we take our entries, right? So as I was saying, let's take this for example over here. This over here, the market was in a downtrend, right? Pulls back 50 moving average and 50 level over here. So we take that entry. Right, so right over here, what we see over here is right over here, the market was below the MBA over here. And so when a downtrend, market pulls back to the 50 moving average and the 50 level over here, we take that entry, right? And then market goes above the Lake MBA over here, right? But unlike this over here, the market doesn't come back straight, right? It goes above, right? Comes back for a retest over here, retesting what this MBA over here. Right? When it tests that MBA, giving us a small shark fin, right? When it crosses over for a buy, that's when we take our buying opportunities. But we don't take a buy in this case because it's another topic for another day. Because the moving averages have crossed for a sell over here, so we won't take that entry. But that's how we use it, right? Then when the moving averages again cross for a buy over here, right? Wait for the market pull back to the 50 moving average, right? And it's also around the level what? Around the level 50 over here. So when it crosses over and it crosses above this black moving average over here, we take our entry, right? We are guaranteed that it's going to what? It's going to buy. Right? Over here again, the market pulls back to the 50 moving average. It's around the 50 level over here again, right? When we get our crossover, we enter, right? Market pulls back over here. Here it doesn't reach the 50 moving average, but it bounces on the what? On the MBA. So we take that entry, right? So this actually works why, because it gives you the trends, right, of that current time. Unlike the payapa strategy, it changes from time to time. But this over here, if you wanted to scalp over here, you could have taken these sell entries over here. Why? Because we got an MBO bounce over here, right? We take that entry over there, right? Over here, we've got divergence over here. We've got divergence over here. Is it this point or did I miss it? Right, but so over here, as you can see on the main chart over here, market created what? A higher high. But on the what? On the indicator window here, it shows lower low. And so anticipate what? A pullback over here. So when you get that pullback, to retest over here of the MBA, we take our selling opportunities, right? So if you're interested in learning how the TDI works, comment in the comment section down below that you're interested, and then maybe I'll make a video dedicated only for the TDI, because now I see that there's a lot to explain over here. But yeah, you can actually just use the MACD if you want a simple strategy that you can actually use, right? And if you want me to explain further the MACD, how you can actually use it, how you can actually make money using it, then comment in the comment section down below. So this is it. Merry Christmas, happy festive seasons. I wish you the best year next year, and make your decisions wisely. And by the way, choose any strategy that works for you. Even if the payapa works for you, choose that strategy. Why? Because that's what you're used to. If that's what you're used to, then stick to it. And if it makes you money, that's all. That's all that matters, right? So most important thing is to withdraw. Always make sure that you withdraw. So stay hard.